Okay, so we're going to talk about using undeposited funds versus opening or up and allowing for receiving payment into other account types. So basically, right, looking at the home screen, the workflow here, we create an invoice, we receive a payment, and then when we receive that payment, it goes into undeposited funds, right, for us to decide what we're going to do, where we're going to record the deposit. Okay, now, undeposited funds is extremely helpful in 99% of the time, maybe 90% of the time is a better example. But for people who have money coming in from multiple sources, sometimes choosing undeposited funds as a default is not the best way or the most recommended way. So an example when it's great. So if you own a construction business and you're receiving checks in from your customers, and possibly you take a couple credit card payments over the phone, possibly you use e-invoicing where your customers pay you online, right? All of those areas, they're all being deposited into a bank account, and it's pretty standard business flow. All right. An example where we might decide not to use undeposited funds, okay, is when we have money coming in from multiple sources and we want to be able to post the cash sooner than we can probably even reconcile the different sources and where the money is coming from. So an example of this, here at Fourlane, we have money that comes in from our web store, and we actually have two web stores, right? So we have POS Warehouse, which is our kind of retail side, and then we have Fourlane. So we have money coming in from both of those sources. Then we actually have PayPal accounts where people can pay on PayPal from both those sources. And then when people pay online, right, they pay by Amex, which is a different deposit from our MasterCard Visa, as an example. And then sometimes people pay by ACH, which is also a different deposit type. And then we have people who pay checks in the office, right? They send us checks. And then we get wire transfers, and then we, so basically you can see it starts to add up all these different sources that, are two websites. They both have PayPal accounts. So if I just had it come in and receive payments by PayPal, it could get confusing because I could say, okay, well, was it a Fourlane PayPal or was it a POS Warehouse PayPal? Which one was it? Another good example of this is customers who have a lot of point of sale systems. So we have customers who have multiple locations. Let's say they're using QuickBooks Revel for their POS locations, and they haven't really connected it fully to QuickBooks efficiently, or maybe they have Square or Microsoft or Aloha or something like that doesn't really connect super efficiently into QuickBooks either. So instead of receiving payments or making deposits into undeposited funds, right, where we have several different merchant service accounts with Square as an example, we can set them up into what we call clearing accounts. Okay. And so the purpose of a clearing account is that the money comes in from the bank, right? And we can download those bank transactions. So we see, money from account 1234 with this merchant service provider, and we can deposit all that money into a clearing account. Then as we record the transactions that, happen throughout the day, we record the sales, and the offset of those sales go to that clearing account as well. Okay, again, I know it's kind of confusing. That's why it's in the intermediate section here. So if you're unsure, give us a call and we can help you to decide the best way to set it up. Another reason, a big reason for a clearing account is if we set up a clearing account in QuickBooks, we can reconcile that account. Okay, so again, talking about the way that Fourlane works with PayPal, we have on our chart of accounts, we have an other current asset called Fourlane PayPal clearing, right? And so when the money goes into the PayPal account, right, it gets, well, it also kind of depends. Let's say Fourlane MasterCard clearing, MC clearing, MasterCard Visa clearing. It's a better example. So when the money comes in from the bank account, right, I get the deposit into the bank account, it hits this account, and then as I record my transactions throughout the day, it offsets that account, and then I can go in and reconcile them and say, okay, I got $500 cash deposited, and here I see my 2 sales receipts for $250 each. I can tie those two together, they tie out to 0, and then I can move forward. And we have other videos on this as well. Okay, so undeposited funds as a default. So when you first set up QuickBooks, you come into preferences under payments, it's going to have undeposited funds as a default deposit to account. So what that means, if you receive a payment, right, you don't have an option to deposit it anywhere else, except it just goes straight to undeposited funds. Okay. Same thing with if I had a sales receipt. So if I come in here to my desktop view and I enable sales receipts, on the sales receipt here, I don't have an option, right, of where I need to deposit it to. It's just going to go to undeposited funds. So if you want to change that, let me go down to payments again. I'm going to say don't use undeposited funds as a default deposit to account. Now when I go in and I receive a payment, notice here I have my deposit too. So I can deposit to undeposited funds, but I can also deposit to my Fourlane MasterCard Visa clearing account, okay? Or different bank accounts as well, if you wanted to deposit straight to the bank accounts. Now we don't usually go straight to the bank accounts, because that can get kind of messy as well, right? Because the bank is actually going to see the lump sum for the day. The bank's not going to see the individual transactions, so you want to be aware of that. But that opens us up to allow to deposit to another account besides undeposited funds. And same with on the sales receipts now, I have the option, right? So I'm going to receive a payment in, and I have an option to receive it into a different account than undeposited funds. Okay. Again, let us know if you have questions around that. It can be kind of complicated, the initial setup, but once you get it set up and you know how to reconcile it and you know how to run the reports to figure out what's still uncleared or open, makes life a lot easier when reconciling this cash coming in from so many different sources.